Welcome to this explainer. Okay, I'm super excited you're here today because we are diving into one of the absolute most thrilling and, let's be honest, totally unforgiving assets out there, gold. Today we're going to decode exactly how to trade gold CFDs using a really cool, highly visual system called the Cobra Algo indicator. We'll be checking out how this tool works across multiple timeframes to help us spot those tricky reversals and actually nail down our entry points. So let's jump right in, shall we? Now, if you've ever stared down a gold chart, you know exactly what I'm talking about. Gold is, well, it's notoriously volatile, right? It's famous for these massive sweeping trends, but also for those brutal fakeouts and just out-of-nowhere reversals. So the question that literally plagues every single trader is, how on earth do you time the perfect entry when the market is moving that fast? I mean, how do you know if a real trend is kicking off or if you're just getting chewed up in the noise? You really need a system that can cut right through that chaos and give you clear, completely unambiguous signals. And hey, that brings us right to the star of the show today, the Cobra Algo. Basically, this is a technical trading algorithm built to do exactly what we were just talking about, filter out all that market noise. It's designed to identify reversals and pinpoint precise entry points using a couple of really specific visual cues. First off, it prints these distinct labels right on your chart. You'll see a blue BY tag or a purple SEL tag. Super simple. Then, it uses a color-coded trend cloud that actually trails the price action. It turns green for bullish momentum and red for bearish momentum. So here's our game plan for today. First, we'll look at the gold trading challenge. Then we'll zoom out for macro trends on the 4-hour charts before dropping into the 1-hour sweet spot. After that, we'll look at precision entries on the 15-minute charts, and finally, we'll wrap up with our key Cobra Algo takeaways. All right, starting things off with part 1, the gold trading challenge and how we actually navigate all that volatility. Moving right along to part 2, let's talk macro trends on the 4-hour charts, or as I like to call it, the big picture. So, this is where we really establish that overarching view. And as we look at this, remember why we need this structure in the first place. Trading gold absolutely requires filtering out heavy market noise. I mean, just look at the sheer gravity of this signal right before that massive structural collapse heading into February. Right at the very top, boom, the Cobra Algo prints a crystal clear purple sell tag. But the magic is really in what happens next. The indicator cloud flips to this thick red band, and it acts almost like a dynamic ceiling. For days on end, as the price just plummets from the 5,500 range all the way down past 4,500, that red cloud filters out all the messy intraday noise. Even when you get those short-term green candles pulling back up, they smack right into that red cloud and just fail. The macro trend stays perfectly intact thanks to that clear visual boundary. Now this next view brilliantly shows off just how incredibly versatile this indicator is on these higher time frames. Check it out. During a market peak, a purple sell tag catches the absolute top, right near 4350, which kicks off this long red cloud downward slide. But if we jump forward a bit to April, we see the exact opposite play out. The market completely bottoms out near 4300, and a bold blue buy tag pops up. The cloud instantly flips from red to green, acting as a supportive floor this time, while the price just shoots up toward 4800. So honestly, whether you're looking to short the top or buy the bottom, this algorithm is giving you the exact same visual clarity, no matter the direction. Okay, but what if you're thinking, hey, I don't really want to hold a single position for weeks at a time? Well, this is where we bridge the gap. We can shift our analysis away from those massive macro swings on the 4-hour chart, which, let's be real, require a ton of patience, and move into intermediate swing trades on the 1-hour chart. The pace here is a lot faster, and those setups happen way more frequently. Which brings us neatly to section 3, the 1-hour sweet spot, focusing on those intermediate trend shifts. You know, the 1-hour time frame is arguably the perfect middle ground. It's fast enough to dish out multiple setups a week, but still slow enough to keep you out of that erratic minute-by-minute chop. Just look at this window here between the 23rd and the 25th of the month. We get a purple sell tag that kicks off a move just above 4,200. I really want you to pay close attention to the sheer steepness of this drop. Notice how incredibly tight that red indicator cloud is hugging the descending price action? The candles barely even wick up into the red zone. The downward momentum is just that strong. For a swing trader, I mean, this is literally the dream scenario. The visual cue is undeniable. As long as that cloud stays red and the price stays below it, you just stay in the trade, riding a beautiful multi-day slide all the way down below that 4,000 level. All right, let's zoom in even closer for part 4, precision entries on the 15-minute charts. We're talking pure intraday accuracy here.
So zooming all the way in gives us that real high-speed day trader's perspective. Stuff happens fast down here, often playing out over just a couple of hours. Around 0730, a purple sell tag pops up, the cloud turns red, and the price just absolutely falls off a cliff, from 4,130 straight down to 4,035. On the flip side, looking at a different session starting near 06 o'clock, a blue buy tag flashes, the cloud flips green, and the price steadily stair-steps its way right on up from 4,060 past 4,116. Do you see the pattern here? The mechanics of the algorithm, the tags, the cloud color changing, they stay perfectly 100% consistent. It totally doesn't matter if you're trading a 4-hour macro trend or a granular super fast 15-minute setup. The visual rules of engagement exactly the same.
And that takes us to our final section, Part 5, Key Cobra Algo Takeaways, or our universal rules of engagement. So we've cascaded down from all these time frames, and really, trading with this system boils down to 3 structured, incredibly simple steps. First up, you've got to wait for that definitive label confirmation. No guessing allowed. Wait for that purple sell or blue buy tag to actually print on the chart. Second, watch for the cloud color change to confirm the momentum shift, so green to red or red to green. And third, absolutely respect your chosen time frame. If you enter based on a 15-minute signal, you manage that trade based on the 15-minute chart. If you enter on the 4-hour, you've got to give the market the multi-day room it needs to breathe. Basically, just let the visual structure do the heavy lifting for you.
Which leaves us with one final thought to chew on today. We've seen just how effectively this algorithm maps out the battlefield, right? From these massive macro drops down to tiny micro scalps. But remember, a signal is really only as good as the trader actually executing it. So how will you take these highly structured visual rules and integrate them into your own personal risk management strategy? The data gives you the entry, sure, but you are the one who dictates the discipline. Anyway, thank you so much for joining me for this explainer. I really hope it brought a whole new level of clarity to how you see the markets. Keep studying, stay disciplined, and I will catch you in the next one.